there's two types of insurances that we're trying to purchase for, and it's protection against our property. We've worked hard for it. We deserve to have insurance provided for it in the event that we've lost it by any of our perils listed on our policies, to be able to replace it of like kind. But the other reason that I'd like to focus on today is our reasoning for purchase insurance in the event of a liability claim. When you're purchasing insurance, basically what you're trying to do is cover your assets. Are you aware that not all assets are protected under state laws? When you're looking at liability claims, you could be stuck with a cost of defense. You could be stuck with court costs, attorney fees, and other defense costs associated with that claim. In addition to that, if any settlements are paid out or court judgments, you're held responsible for those payments. But if you have adequate amounts of liability insurance, why have that burden on you? Let the insurance companies cover that by having adequate amounts of liability coverage versus you having to dig through your own pockets to cover those expenses. So a lot of people don't know what's protected and not protected under state laws. As a resident of Texas, your assets are exempt up to your homestead and 10 acres if you live inside city limits. 200 acres if located outside of city limits on your homestead. Mind you, those 200 acres are if you're married. It's only 100 acres per person, so it would be 100 acres if you are single. Of your personal property and contents, you're only protected through 60,000 of your personal property, only 2 vehicles, your retirement accounts, including your annuities. And then last up my list, but certainly not least, you are protected against with your life insurance policies and any cash values that's accumulated within those policies. My next screen are assets that are not protected. And this is where we need to really put pen to paper so that you can start jotting down where you fall on this list. If you look at your insurance policies that you currently have in force, if you don't have enough liability in that policy to cover your exposed assets, then you need to get in front of your agent so that you can start covering yourself properly, so that you're not caught not having proper coverage in the event of a rather large lawsuit against you. So as residents of Texas, your exposed assets include your money market accounts, your commercial real estate, any excess of over 200 acres, mind you, this is if you're married, it would be excess of 100 if you are single, all of your checking accounts, any CDs that you may have, and any stocks or bonds. So what can our insurances offer you, and what can I provide for you? At Texas Farm Bureau, we are focused on your needs and the needs of your land. Why do we do this? Because we understand that you take pride in the life that you've built, in the land that you sow, and the land that you call home. Texas Farm Bureau it currently is a nonprofit organization, and it was developed many years ago to help aid our farmers and ranchers. It's known as the voice of agriculture. And one of the things that a lot of farmers and ranchers talked about way back when was not having adequate insurance provided come in provide protection for their property, because a lot of insurance companies back then didn't provide services for ranches larger than so many acres, or they didn't provide home protection for any houses outside of city limits. So when you become a member of Farm Bureau, and what the organization did was provided member benefits for these members, and one of the benefits was insurance services. And so that's where I come into play. Through our insurance services, now we can insure most structures, even outside of city limits. When you search your insurances through Texas Farm Bureau, and now many other companies are starting to jump on board and provide these services, what we're including is liability coverages for your land, your home, whether it be in town, outside city limits, part of the ranch, outside of the ranch, your barns at the ranch, and your machinery at the ranch. A lot of insurance companies, and Texas Farm Bureau included, can provide these policies individually. We can have a policy covering your property, policy covering your homestead, policy covering your barns, and policy covering your machinery. Where Farm Bureau is rather unique is we understood that while we still provide these policies for you, it starts becoming very tedious trying to keep up with what policies are coming up for renewal, what's covered on this policy, and which policy is that? Is it my barn? Is it my farm equipment? And so with all the different policies, it tends to be a headache in keeping track of everything. So like I said, what makes Farm Bureau unique is we put together what's called a package policy, and it's called our Texas Ag Advantage. The Texas Ag Advantage policy provides a package for you and your acreage. It's designed specifically for your land and your assets, protecting each one individually. So what we did is we took all of those policies that I mentioned before, and we've combined them into one large policy where we've got it all lined up. Section 1 covers your home. Section 2 covers your liability of the homestead plus extension to any of your farm and ranch land. Section 3 covers your structures, meaning your barns and whatnot. Section 4 would be your farm equipment. So we compartmentalized everything on these policies so it's easier for you to keep track rather than thinking of different policy numbers that are coming due. It's one policy, one annual payment, whether you pay it annually or on a monthly basis, but it made it a lot easier for our farmers and ranchers to keep track of, besides all the different discounts that are included with bundling everything on this type of policy. So as I mentioned before on that second paragraph, the Texas Ag Advantage policy can include your home in or out of city limits, your acreage. Any acreage that you may be leasing out is also included on the policy, any farm or ag-related machinery, and your barns or other structures. In addition to this, when you're looking at liability policies for anyone that opens up their ranches for recreational land use, and this includes your hunters, any bird watching activities, any trail rides that you may have in your property, these policies also allow for recreational land use so that we have that liability extension for that type of service. So now let's talk about how farm liability protects you. When we're talking about farm liability policies, and like I said, this also encompasses the TAA or that Texas Ag Advantage policy. What are you doing? You're providing protection against yourself or for yourself and your immediate family members within the same household. Our personal liability can range anywhere between $25,000 up to $1 million. Now, when you're putting your pen to paper and you're taking down the value of your property, your assets, that's where you want to make sure you've got adequate liability to cover you in the event of a lawsuit. So what type of lawsuits can arise off of your properties? We've seen claims as far as people coming in, guests coming into your property and someone getting attacked by bees, someone getting bit by a rattlesnake, children coming in and you've left farm equipment exposed and they were playing on it, fell down and hurt themselves, injured themselves. We've seen hunters come in, say bird hunters, and somebody accidentally gets shot. You want to make sure that you have the proper amounts of insurance to cover these. If you feel like your assets are totaled above $1 million, we have other policies that we can look at as well. Umbrella policies for these type policies that cover any excess over the limitations of what these underlying policies carry. So that's your personal liability. We also cover for personal medical payments for designated insureds. These designated insureds would be you and your spouse, your children, or even grandchildren if you're a small family operated farm and ranch. Then we can designate those members of the household on this policy, and it's up to $5,000 on medical payments in the event of bodily injury or harm on the ranch through the machinery or whatnot that can assist you at the hospitals before your health insurances kick in. We have physical damage to property, and actually while I was preparing all of this, I started looking through the physical damages to property, and I learned something new. If you have any 12-year and under children who, let's say, go onto a neighboring farmers and ranchers property and intentionally cause damage to their property, this will actually cover those damages up to a certain extent on the policy. So just something something to know. We know our kids can be mischievous sometimes. We cover for chemical drift. Chemical drift, I like to focus a lot on because the importance of it, I think, is a lot more important than what people actually realize. If you spray a lot on your property, say herbicide, pesticide, you know, spray for shrubbery. I know with my family, we're cattle operations, and so we like to ensure our fields behind the house are nice and clear. So we do spray to keep all that shrubbery down for grazing purposes, and of course to bale our hay if and when it rains. And what the chemical drift liability portion on this does is, if you have a neighboring farmer or rancher that has, let's say, organics, for example, they have very strict regulations as far as no chemical being applied to their products for, I want to say, up to 7 years. So if you're spraying ground application on your property and that wind picks it up and it now damages their product, not only have you damaged the product that they're growing, but you've damaged up to 7 years worth of a regulation that they're having to follow. So with our chemical drift policies, they start out at $25,000 automatically included into the policy, but for like $4 more per year, you can increase that up to $50,000. So chemical drift, I know a lot of people don't talk a lot about it, but the importance of it is definitely there. We do cover employee liability and as well as animal collision. Now you may ask, does that include illness and sickness? No, it doesn't. When animal collision comes into play, we're looking at anybody whose fence line has gone down, or I think in some areas we see it more during hunting season. I know farmers and or cattle, our cattle operations, or farmers, ranchers are starting to move their cattle into other areas, other properties, to make room for their hunters and ranchers to come in, or excuse me, not hunters, yes, hunters. And a lot of the times these hunters leave the gate open, cattle start getting onto the road. What animal collision does is, in the event of someone colliding with that animal on the road, it will pay for that animal up to $1,500 per head, or market value at the time of the loss. The liability that arises out of that bodily injury claim, because you know that will happen if they're able to prove negligence on your part, which would be the property owner, that personal liability that we spoke about at the very beginning would then apply for any bodily injury claims arising from that incident. We also cover for fire liability, and this is one of the biggest differences between your commercial general liability policies and your farm and TAA policies. Commercial GLs don't cover for fire liability, and this, what I'm talking about, are controlled legal burns. If you have a controlled legal burn that gets out of control and jumps a neighboring fence, our farm liability policy will pay out to pay off those damages that your neighbor received off of your controlled burn. So now let's talk about passing the torch. As women in ag, our greatest hope is that our children always do better than us. But when your children want to take over or are forced to take over, my question to you is, will it be there for them? Would you rather hand over property to the government? And who do you think will take care better? Well, as a member of Texas Farm Bureau, one of the things that we provide for our customers are estate planning. We do have estate planners completely free of charge, if you're a member with us, that can come down and help you start organizing everything that can come into play after your death. If, or even while you're living, if you're one of those ranches that are in the process now of trying to take away the exposure on your individual side, and you're wanting to now place the land, your farm equipment, any of that into, say, LLCs, LTDs, family limited partnerships, we have estate planners that can come down here, save you a lot of expense before you go to an attorney to actually draw up your paperwork, but they can help guide you in getting everything lined up for you, so that once you go to an attorney, you know pretty much where you want to go, what you want to do, and everything that you're needing to check off on your boxes. So where I can help you out in this area is talk about life insurance. It's extremely important that you want to leave something behind for your kids so that at the time of your passing, they have a better idea of where that money can go so that they're not scrambling to hold on to the ranch, to hold on to, you know, your ranch houses if it's not your primary homestead, or the farm equipment. So we have life insurance products for families. And when I sit down with my customers, what I normally do, first of all, I try to meet with them once a year or every other year, because our needs change on an annual basis, on a daily basis, really. And so it's very important that you're constantly staying in front of your agent so that you can go over this stuff. What I do is I sit down with my clients and I provide this life insurance needs analysis list. And what we do is under name, I put Mrs. and Mr. listed on there. We go through each box accordingly. We talk about funeral costs, because the reality of life is we are all going to die eventually. It's just a matter of when. So we put down funeral costs. And if, I don't know about you, but I plan on living a very long life. So funeral costs today could be anywhere between $7,000 to say $15,000. But if you're on that long term, like I am, hopefully, then we're looking at increasing those funeral costs just to keep up with the rate of inflation. So you can put anywhere between 20,000, say 40,000. Your next box would be education expenses. So if you have little ones like I do, I pray every day that I'll be here long enough on this earth to see them get through their education and become young adults. But in the event that, unfortunately, I am not here for that, I don't want the rest of my family members or my husband to worry about paying off their education. So we put down our education expenses, multiply it times 2 or times 3, depending on the type, you know, how many children you have. And then we go over to your loan payoff. This is any credit card debt, any properties that you may be purchasing, any student loans, any vehicles that you're still paying off. If you're like me and you have a bad habit of getting a vehicle every, 3, 4, 5 years, that vehicle debt is constantly there. So have money set aside on your life insurance policy to pay off those debts in the event something happens to you prior to that payoff. We offer mortgage protection, and this is also extremely important. In the event of your passing or your spouse's passing, you don't want that surviving spouse to have to worry whether or not they're going to have a roof over their head. Have a mortgage protection policy in place so that if something does happen, that person can pay off the mortgage, not have to worry about that, and focus on grieving on the loss of their loved one instead. Our readjustment screen that when I sit down and I talk to my customers, there's really 2 ways that you can look at this. I have clients that have young children and they tell me, well, if my spouse passes away, I don't want to be forced into the workforce right away. I've got young ones. I want to stay home. I want to be home with them to help them grieve the loss of their mother or their father. So what we do in that case is we take the annual salary that individual was bringing in, and we multiply it by, well, how many years they want to stay home with their kids before they're forced to pick back up with their lives, get back into the workforce. And then I have other people that say, well, we pretty much have everything that we need paid off. So really, if anything, I'm just looking for readjustment to the loss of that income. And I want something that'll just pay the bills for a year before I get back in, or 2 years, or just a couple of months. And so you can write down your monthly bills and multiply that by however many months or however many years you want that supplement to come in to allow you to readjust to life without that loved one here. So what you do is you take all of that together, you add it all up, subtract it from the current life insurance that you may have in force already, whether it be at work or with another insurance company, and then you put that remaining balance under the need. If you still have a number there, then you need to get in front of somebody to talk about covering that need. Of course, I'm always available for that, but if you already have an insurance agent that you deal with, you may want to talk to them about getting that other coverage. So guys, that is pretty much everything that I have for you today. I hope it was enough information for you to take home. I'd like to ask everybody one favor. get your phones, stop scrolling on Facebook for a second, and take a quick picture of this screen. This is my information. I've got my cell, my office, my email. I'd love to hear from you guys, what you all thought. If you have any questions regarding this, I'd love to help you out with that. So thank you. Please stay safe, and God bless.
Thank you so much, Gail. So we have a couple questions for you.
Okay.
Let me get
Where
them
do I
back
go?
here.
I think I stopped sharing my screen, right?
Yes, you're good. So we have somebody asking, do you use credit score to rate policy?
So most insurance companies, if not all insurance companies, do use credit, but it's not a direct reflection off of your TransUnion or anything like that. It's more of an insurance credit score. And basically what they're doing is they're looking for past claims experience, failure to pay premiums on time. If you do have multiple accounts, a lot of shopping that you're doing with insurance companies, it's an insurance credit score. So yes, we do. And it just, like I said, it depends on your past insurance history.
Okay, awesome. So, okay, so we have another one here. How large or small a operation do you insure?
It doesn't matter. What we do is we sit down in front of you and find out exactly how large of an operations you do have. We have underwriters. Our home office is located in Waco, and if we have questions on the size of that operation, they'll help guide us. But I mean, I have ranches well over 10,000 acres that I oversee, very large ranching families. There's no limit because we offer our umbrella policies for any excess coverage under above those underlining policies.
Okay, one more question. Can I insure someone that is not my spouse or child, such as maybe mom or dad?
Insure as far as, are you talking about a life insurance policy, or are you talking about like farm property? What type of?
Yes, it would be a life.
Okay, so you can, there are different types of policies that we do offer. We have individual policies where you can be the premium payer of a loved one, whether it be your parents or your children or even grandchildren. We do offer life policies. We offer key employee policies. So if you have an employee that is your number one guy or woman, and you know that your operation will heavily be impacted in the event that they're gone, we offer these key employee to help supplement in the event of their death, either to help their family or to help your operation go until so that you can in that time frame either get somebody up to the same level that they were or replace that person. So we have buy-sell agreements if it's a ranch or a farm that's between, say, brothers or sisters or, you know, two families, where in the event that one of them dies, the other family can then buy out that operation. I hope that answered your question.
It's Aisha asking, so. Okay, so if there are any more questions for Gail at this time, we'll go ahead and save them for the end of the presentation. And we're going to go ahead and get moving along with our second presenter. Thank you, Gail, for being here with us. We'll go ahead and move on. Our next presenter is Will Huddle, and he is with the USDA National Ag Statistics Service. So we'll go ahead and have Will share his screen and get ready for his presentation.
All right, well, thank you for the opportunity, and I really appreciate the participation this morning from everyone. I would much rather be there in person visiting with you, but under these circumstances, I'm going to do the best I can to provide you a little bit of information about NASS. Who is NASS? We're one of 19 agencies or offices within the U.S. Department of Agriculture. We have actually one mission, and that is to provide timely and accurate statistics in service to U.S. agriculture. And we'll take that apart a little bit at a time. The timeliness part is in referring to our reference dates on our surveys. Majority of what we do has a specific reference date, as for example, our stocks report, it has a December 1 or March 1 reference date, as do our crop production reports. So we're trying to gather data as accurately as possible in a systematic approach at a very specific point in time. Sometimes we run into issues where we collect data in the first 2 weeks of a month, and then no sooner we finish data collection, we have a weather event that perhaps causes some harm or damage. And that's why we have that internal reference date for that specific data collection point, is now we can measure it the next month on what that impact was. So again, we try to keep very timely information based on reference dates. We want to gather it in a systematic approach, whether it be personal interviews, telephone interviews, electronic data reporting, or even some of the mail surveys we still conduct, and are very, very very pleased to get a good return on those as well. So what do we do actually? USDA NASS does administer the statistical program for the U.S. Department of Agriculture, and we conduct the Census of Agriculture every 5 years, years ending in a 7 and a 2. So if you may be familiar with the 2017 census that was released in April of 2019, we're currently working on the 2022 census, and that's why I was very gracious that Aisha gave me the opportunity to visit with you today, because we are looking at building our list now for all size operations, both small and large, organic, non-organic, traditional, livestock, vegetables, you name it, we want to collect the data on it. We also coordinate with our state and federal partners to help with their statistical needs. There's occasional federal programs that we either discontinued or no longer doing that may need support at the state level. So we partner with our state departments of agriculture or land grant universities to maintain those data sets as well. And then we do statistical consulting for state, local, or universities. We even have an international programs office that we help provide, help establish these types of statistical programs in foreign countries so that we have a better global representation of what agriculture production is doing. And that in essence makes it, since we are in a global economy, it makes a little bit leveler playing field when people are looking at particularly market sensitive data. And then finally, we do statistical research. We are one of the premier statistical agencies within the federal government. We also look at different methodologies, new methodologies, looking at the progression of technologies and how we can use it rather than the old way where we would contact people repeatedly to get information, trying to develop other methods of which we can collect data or by either remote sensing, satellite imagery, or some of the other methods that don't necessarily harass respondents so often with collecting data. And now a little bit about what NASS doesn't do. We don't set policy. We don't regulate activities. We don't permit influence. We don't disclose individual reports, and I'll get to that just here in a little bit. Nor do we favor any groups above anyone else. So whether you're a livestock producer or small vegetable producer, or whether you're organic or traditional, for us it doesn't matter. What matters is collecting that data as accurately as possible so that when we put it in our totals and create a published estimate, that we have 100% confidence in the quality of that information that we're providing. Nor do we do market commentations. Oftentimes when we'll have a report that comes out, we'll get media calls wanting us to discuss information about the report. We can talk about the methodology of which we use and what have you, but as far as making any kind of market information about which direction we're expecting or what does it mean, that information we leave up to the economists and the marketing experts to do. That keeps us totally unbiased. Again, our sole mission is to collect the data and get it out in the most timely and efficient manner, but make sure that it's all relevant to the current use. And that's what keeps our agency as a premier statistical agency. So I want to touch a little bit about data confidentiality. You know, we are guided by Title VII of the U.S. Code. Information that's provided to USDA NASS is safeguarded under this law. Any information you provide cannot be shared with anybody else. In fact, if you want to get a report back that you contributed to NASS, you have to provide an administrative form and a form of photo identification before we can even return your own information back to you. So this is something that's really important for NASS. Protecting your information, I often tell producers, is more difficult for me than it is probably for you to provide it. Because once I have your information, I have to safeguard it until it's no longer of use, and then we have to destroy it based on the disposition manual that's provided to government service. And why is that confidentiality important? Here's the number one reason. We have two basic principles in NASS. We do surveys on an annual basis, and that's all based on voluntary reporting. What does that mean? That means when we send the questionnaire out to you for your cattle inventory or your crop acreages or what have you, you know, it's strictly your prerogative to complete that survey and send it back in. There's no law saying that you have to, but we feel, and hopefully agriculture sector in general, feels that the value of that information is so important that it's critical to respond to those surveys. We put out a little over 400 surveys annually. As you can see from this very busy calendar, it keeps us quite busy during the weeks and months throughout the year. This information is available a year in advance. So we know in January 1 when the December crop stocks survey is going to be coming out with their report. We know when all the county estimates are coming out. We know when the quarterly hogs and pigs reports coming out. And it's all driven by not just the date, but also by time. So this is very important to us, and that's why we're very, very diligent with ensuring that the information that's provided to us is trusted in the highest security possible. So again, types of reports we issue, we've got the crop forecast, the crop production forecast that we issue usually around the second week of every month through the growing seasons. We've got our monthly livestock reports like milk production, poultry and livestock slaughter, cattle and feed inventories. And we do our grain stocks reports every quarter, March, June, September, and December, as well as our acreage reports and hog inventories. So we do a wide array of reports. I haven't even discussed the economic and environmental reports, but we also participate in those and usually issue cropping practices as well as chemical use information on an annual basis. So why do we do all this? You know, is it to make sure we all have a job? Well, partly. But I ask this question, you know, to most of my live audiences is, you know, if you've ever gone someplace that you've never been familiar with, it's all brand new to you, and you use a road map or GPS or some type of navigational device, that's what the purpose of these agriculture surveys are. They help provide a roadmap for agriculture and for the producers and agribusinesses that help ensure that industry remains strong. Without information like that, it's a free-for-all. No one would know without crop production estimates what the projection is for those crops or those yields. Insurance companies would be very difficult. They could have their own information, but it may not be actual and real, and they may have to wait until the actual crops are completely harvested before they would have any indication on what the supply and demands were. But it all boils back down to the producer. You know, it's without having the participation from producers to provide their information to NASS, all this would be for naught. And that's why, again, I appreciate the opportunity to visit with you. I'll leave my contact information here with you. Again, I want you to know who I am, who we are, what we do, and how we then can help you provide back information that you can use in either your marketing plans, your decisions for expansion, or just for fun information about how out-of-state agriculture is. Again, producers are the only one that can really provide this information, and it helps level the playing field with marketing decisions. I mean, if no one knows except for large marketing companies or manufacturing companies what the potential production is or livestock inventories are, then it makes it very hard for an average person or a smaller person or someone that is not currently in agriculture but looking at it coming into agriculture. It'd be very, very difficult trying to find the information to get started. So I mentioned the basic principles. The Census of Agriculture is the second principle that we work through. This does have the mandatory reporting clause in it, and that's a fact of the law that was passed in 1997. A little bit of history on the census. It's started in 1840 in 26 states. Our last one, completed in 2017, is the 29th census that's been completed, and the fifth one that NASS has conducted. The census used to be in the Census Bureau, Department of Commerce in 1997. Congress felt like that the Ag Census belongs with the Ag Department, and hence the Census of Agriculture was moved to USDA NASS, being that we are the statistical agency for the department. The census is the most comprehensive data set there is on agriculture. You'll find every 5 years counties at all levels, but counties specifically, where you'll have a complete library of the agriculture, not only the agriculture produced and grown, but you'll have also the demographic information and perhaps some data sources that aren't available during our annual estimation program. This is what's critical because, again, if you're looking at a new business venture or you're wanting to see how the structure of agriculture has changed over years, the census is that data set that will help you get that information. There are some additional tools available. We have the congressional districts, the watersheds, and zip codes. And then sometimes there's a data set that's, or a data set that individuals are looking for, and it's not quite in a readily available format. So there is a mechanism in place where individuals can make a request for a special data tabulation, at which time that will go through our headquarters process. And then if the data is available and it's not going to disclose individual information, is a possibility that that data tab can be published. So I spoke a little bit about farms. You know, what is a farm? Well, a farm, according to USDA's definition, is any entity that can produce or sell $1,000 or more of agriculture products. And I often explain to individuals that out of the entire census data set, which has about 9 million data points in it, the farms and landed farms is probably the two of the more important ones, because we need to know where the farms are and who's producing those, what's being produced. Again, this is the kind of the structure of agriculture. How has that changed over time? What new products are coming into production? Where has industries moved? A good example is, you know, the Minnesota-Wisconsin dairy moved to California. Now it seems like they're moving back to the Texas High Plains, the Panhandle of Oklahoma, and some of the other drier climates. So looking at the census periods over time, you get to see how the structure of agriculture has changed a little bit. Not only that, but who uses that data? Well, farmers and ranchers can rely on those reports, again, for making decisions about production and or marketing, or if they want to get into a new type of business, they can look at where that particular industry has been produced before and perhaps seek out assistance from those areas in helping them get started in their own backyard. And I mentioned food processors and some of the other entities that use the data, but there's also analysts that use the information. A lot of university researchers, they'll comb through the data, and if there's issues with a certain industry or a sector or opportunities to develop research programs, oftentimes this data is used to help produce a grant that then can be applied for funding to help look at further research into those areas. So it's not just the federal government needs more information about you, but we need the information to help you. How do we do that? It can be done by producing policies. A couple examples of those is the Veterans Farmers Program that's been introduced. It's always been a little difficult for new and beginning farmers to enter the agriculture industry. And so there's microloan programs formed several years ago that are managed by the Farm Service Agency. And there's an array of other opportunities that help individuals such as each of you. If you've been paying attention to the news lately, the U.S. Department of Agriculture has been kind of supporting the funding of broadband internet services to rural areas. This information is also useful when you're looking at where the farms are, where we need to put money in programs such as rural waters development or fire suppression activities. So it's more than just knowing how many acres of corn or lettuce or how many sheep and goats are in the area. It's where those farms are, what kind of critical infrastructures need to be supported to help that rural America remain a very viable community. So when you read about an article in a trade magazine or a newspaper, you see something on TV, chances are some of that information probably originated from NASS in some foreign data set. I'm not saying that every statistic out there belongs to NASS, but a large part of the data collected from NASS typically is for purpose of producing some sort of analytical decision. So how do you get to the information? Well, I've got two slides up here with kind of our website. This one here is for our surveys program. It is our homepage. You can get to the census from this website, but this is primarily our surveys page, where you can go and get all the specific reports for the annual programs that we produce. There's also a screen on here that'll get you our due date, release date calendar if you're interested in having that. Or if you want to get to the data yourself and perhaps query some of the information out of here for your county or your specific commodities, you can go to our quick stats database here and retrieve that information. The second site here has our census website. Again, it's got our 2017 and 2012 census on it. But if you're somewhat of a history buff like I am, we actually do have all the censuses back to 1840 linked to this website. So if you're curious, 100 years ago, what agriculture looked like in your county, in your community, you can go back and look at those previous censuses without having to go to a library. Now, most of that information is just in print copy. It's scanned and imaged into the website. It's not available in our quick stats database, but the previous three censuses are, so you can get to that information. Just some of the highlights, and I wanted to throw out here, we do produce individual highlights by demographic groups as well as by counties. So on our census website, you can get a glimpse of some of the specific county level highlights. This one happens to be for the state of Texas, but we do also have those available at each county level. It's a two-page flyer. It kind of gives you the story about what agriculture looks like by demographic group. Again, you can go to each specific county and you can see what the county information data is as a whole. One thing that I stress to people, especially if you're working with your county commissioners or your county advisors, is the market of agricultural products sold in your county. That's a good statistic, and I don't know how I can go backwards a slide, but on the previous slide, there is a data set, or a data item there. It says market of agricultural products sold. That kind of tells a story for your county commissioners and what have you, what contribution agriculture really does make to your county. If that production wasn't in your county, this is how much you would be losing on an annual basis. not a 5-year basis, but on an annual basis. That's huge. When you're talking about almost $25 billion at the state level produced on an annual basis. Quite a contribution. And then finally, I want to leave you my information here. I'm getting ready to send my email in the chat box here in a minute. That email address that you see here at the bottom of the page at NASS, RFOSPR at nass.usda.gov, that is our main official mailbox. I do ask that if you are looking for information or if you want to discuss some item independently, please reach out and send me an email to that mailbox so it'll get routed to us. And then we will be more than happy to sit down and work with you and try to get the information that you're looking for. So with that, I'll take a pause and see if we have any questions.
Okay, thank you, Will. Let me see here. I think we have a question. Can we create stat reports, etc., at my county level for X amount and Y crop was produced?
I'm not sure I quite understand the question.
You maybe want to check the chat box. I think she's asking at my county level, X amount of Y crop of a certain crop. Oh, let me see. My chat box moved.
We do have county level statistics. They are by crop, unless you use the county level profile from the census. Again, that's going to be just an every 5-year provided publication. But those profiles do give you by county all the commodities that are produced in that county, as much as is available that we can publish. You know, there are some disclosure rules that we have to work through. So there may be a commodity produced in a county, but because of either the low amount of responses or the small amount of participation, we cannot actually publish that. But we do at least publish the farm number for that county. And that again may be a question that, you know, if you're looking for some specific information, just send us an email and we can work with you to get that information.
Okay, we have one more question. How can growers sign up or register so that they can participate in surveys?
Oh, that's an awesome question. On our website, again, either the census website or the surveys website, there is a button on there. It's fairly large. I think it's down on the right-hand side. It says Add Counts, Sign Me Up. And that's where you can click on that button and it'll link you to a page that allows you to put in your information, and then we'll get you signed up.
Okay, and they're asking if you can put your contact slide. Oh, okay, I think you put your email there. And then also, is there a tutorial on how to use the database?
There's not a tutorial. That's why I'm offering my email address. It's a little difficult. NASS is working through several initiatives now to help improve that data delivery system to respondents. But at this point, the simplest thing, and again, we're here for you. You know, we're your service provider. So if you're looking for information, it's no bother for us. We're here waiting for you to send in your request, and we'll work diligently to try to get you the information as long as it's available.
Okay, perfect.
I did put our main email address here in the chat box. You're more than happy to call our phone number, but with this pandemic underway, it's easier to carry things through email than it is trying to retrieve phone messages. So if you send the email, we'll get to you usually within 24 hours.
Okay, perfect. Thank you again, Will, for being here with us today. If there are any questions that may arise in this next presentation that you have for Will, we'll go ahead and address those after this next presentation. And so this next presentation is going to be talking about business structure, and we have Aisha Cruz Reyes from the University of Texas, Rio Grande Valley Center for Sustainable Agriculture and Rural Advancement. So we'll let her get set up and then she'll get started.
Okay, hi. So before I start my presentation, I want to reiterate something that Will said, and that's that they are here for us to use their stats and to be able to dig in, and they offer a lot of help. I've known Will and I've worked with NASS for quite a while, and they are the most helpful people. They'll help you dig through that information and find what you need. So when he says that they're there for us and that they'll help us, he really means it. Sorry, thanks for being here today. I cheated a little bit. I recorded my presentation because it is it's a lot of information, but it's really important, especially if you're starting a business or if you have a business and you think you want to grow it. So I'm gonna attempt to do this. Hopefully I do it right. And then I'll be right here. So if you want to put questions in the chat box, I can answer them right away, or we can talk. I can answer them at the end of the presentation. Good morning. We're going to get right into this and talk about the options for business structure. When deciding what kind of structure you want your business to take on, then you should think about ownership, or the number of owners that are involved, the kind of tax situation that you're in, and also the risks that you're willing to shoulder. The first and probably the most easy to get into is a sole proprietorship. This doesn't require any filing with the state. If you're running a business, then you are, and you're doing it by yourself essentially, then you are the business. Because of this, the profits or the incomes and the revenues and the expenses that you accrue in the business through your business activities will be reflected on your personal income tax return. You'll have to pay on that or not. So what you would fill out is your Schedule F if you're a farming or farming related business, or Schedule C if you're more the regular type. And if your CPA can handle this, or if you do like a TurboTax or a Quicken or QuickBooks kind of thing, then it's rolled into the program already. The hard part about being a sole proprietorship is that you are the business and the business is you. So if your business gets into some debt trouble, excessive debt, or there's a lawsuit or something like that happens, then you and your assets are in some trouble. And you'll have to figure out how to deal with that, usually with the help of a lawyer, maybe a CPA. The next type of business is a limited liability company. So this is a little bit different in that you're more protected because you were separate. You are one thing and your business is another. So you're not liable for any kind of those debt or lawsuit troubles that I mentioned before. This can be you, or it can be you and some other people that are working with you. You will have to pay tax, just like a sole proprietorship. You'll have to pay tax on any profits that the business generates, and also on top of that you'll pay self-employment tax, which is you'll be paying towards Medicare and Social Security, which is not the worst thing, I think. A partnership is similar to a sole proprietorship in that it's not very formal at the state level anyway. So what you can do is make an agreement on paper, hopefully on paper, with a partner or more partners, and you all decide how you want to run your business. You just establish yourself as owners. In a limited partnership, there's usually a general partner who, makes more decisions, has more control of the business. When profits are divided out and they may get a bigger share of that, they have to pay personal income tax on that profit, and they also have to pay that self-employment tax. A general partner also is liable for what happens in the business. More risk, possibly more reward. So that's something to think about. The other partners in a limited partnership are a little more protected. They do also have to pay personal tax, but maybe not self-employment tax, and they have limited personal liability. So they're a little more guarded from what might happen with the business. But on the flip side, they also don't get the bigger share of profits, right? Risk and reward. In a limited liability partnership, all the partners are basically in the same situation. They all pay personal tax on the profits that they receive, and they are all they're more protected as far as the liability. In a corporation is different in that it's very formal. You have to file for it. You have to keep records. the rules are more stringent with a corporation. One person can be a corporation, or it can be more than that. Corporations are subject to corporate tax, so the business makes a profit. The business itself is going to be taxed on that profit, and that's something you'll have to send to the government, and then you can divide out your dividends, and the owners in the corporation are going to have to pay tax again, because now it's personal income. There's an S corp that you do with IRS, and that sort of essentially eliminates the corporate tax. The owners still have to pay that personal income tax, but the business itself is exempt. Again, the corporation, the organization is now very separate from the owners, so those owners are not liable for debts and lawsuits that are presented on or put on the business. A nonprofit corporation is different, even at the ownership level, because there are no owners per se. There's leadership, there's a board of directors, and that's something that you work out with the state, and you have to establish with the state. The whole IRS, the whole nonprofit tax exempt situation is actually an IRS filing, so you have to deal with them for that, and then it kind of trickles down to the state level. There can be profits in a nonprofit, but those profits have to stay with the organization. You cannot, like in other businesses, divide that out amongst the owners. It's not allowed. It's kind of spelled out in the paperwork. You can be a nonprofit, but you absolutely cannot, when you have profits, you cannot divide them amongst your members. Just because you're owners or because you're members, you're not able to do that. It is a separate entity than its owners and its members, so owners are not liable for any kind of lawsuits or debt. And then a cooperative. In Texas, a co-op has to have 5 or more owner members. The whole idea of a co-op is that you're a group, so 5 is the minimum. The co-op itself is an organization that's tax exempt, so they don't have to pay that corporate tax, but when dividends are spread out amongst the owner members, then those people are probably going to have to pay personal income tax. And again, it's a separate entity, so owner members are not liable for lawsuits or debt that come on the co-op. A co-op is a business, so there's obviously that goal of making money and turning a profit, right? But it's so much more. It's much more than that in a community sense. A co-op, the purpose of a co-op is to have this group of people that work together towards a common objective. They have a shared goal of fulfilling a need in the community, and so the idea being that individually any of these people would have a hard time or not be able to fill this need, but as a group working together and pooling resources, then filling the need, providing a service, creating jobs, and that's something they can do together. It's this idea of together we are better, and together we can do more. There are lots of reasons to co-op. Here are some. One, again, in the business sense, is that a group of people with more resources can access more and better goods and services. Economies of scale, right? You can buy bulk at a better price. You can attain services if there's more of you rather than just one of you trying to get a phone company out to your house. There are tax advantages. Again, the organization is tax exempt, and depending on the services that you provide, the individuals might be able to get some tax relief. Keeping resources local. If you live in a community, a rural community, if you've ever lived in a rural community, you probably know and seen that a lot of stuff leaves the community, right? You have to go out for groceries, you have to go out for entertainment, you have to go out to find a doctor or a lawyer or any kind of professional. You have to go out to work sometimes. Having a co-op within a community, especially a rural community, can help keep some of those resources there, and possibly even create jobs depending on the purpose of the co-op. A big thing about co-ops is that it's a democratic kind of process. a key component of a co-op is one member, one vote. So each member owner of the co-op has as much right to vote, as much voice as the owner member next to them, and everybody else in the room. So there's a sense of ownership and power and empowerment that comes with being a co-op member and being able to help guide the direction of your organization and what they provide for your community. And then going back to the idea about jobs and services and resources that you get to keep in your community, that makes your place, your hometown, your community just more stable economically. If people can work where they live and live within where they work and don't have to leave so often, and don't have that kind of inconvenience, then that makes your community more economically stable. I mean, again, it's still a business. A co-op has these great ideas, this great kind of community feeling to it, but it's still a business, and so it needs to turn a profit. But those profits in a co-op are retained in the co-op, in the business, and then it's returned to the member owners. So when this co-op succeeds and people work to help it succeed, to make it succeed, then those same people are going to reap benefits of the monetary kind. And that's helpful. And when a community is, again, economically stable, then that's helpful for the members of the co-op, but also all the generations in that community. There are several types of co-ops. I'll go through them here. A consumer co-op is where members have access to certain items, and maybe they even have that access at those items at a better price. So a good example of this is a grocery food co-op. The business is the grocery store. So imagine or think about when you go to a big box store, right? You go, you get your grocery cart, and you go and you fill it up, and then you pay all this money. You take your groceries home, and you don't really see that money again. It's gone. It's off to pay the store first, right? They get a big bulk of it. Well, if you were part of a grocery co-op, and these are big in the urban areas, and you're part owner of that grocery store, you go into what's essentially your grocery store, you buy your food, you pay your money, your prices are different. They're probably better, discounts or specials and whatnot. And then at the end of the year, if that grocery store has done well and turned a profit, then you could get some of that money back. Some of the money that you spent can now come back to you because you are an owner of that business that was profitable, and that's how co-ops work. Pretty concept. A purchasing co-op it's a group that's taking advantage of economies of scale, buying in bulk, and it's one thought about it is one getting a great price because you're buying in bulk, right? Per unit cost is cheaper, maybe delivery cost is less than what it would be if you had to buy smaller quantities of that item. Another kind of line of thinking is services that you wouldn't have been able to get if you were if you're an individual or if you're a small group is now more accessible because you're a big group. Think about Valley Telephone. If you're here in the Valley, a telephone cooperative or even an energy cooperative. Those are some of the best prices as opposed to like a Time Warner or a AEP. And on the Valley Telephone side, because that's where we live, we know that come April, after their fiscal year ends and they've calculated all the profits, then we can look forward to a check, right? Because we are member owners. It doesn't feel like that. We feel very removed because it's such a huge co-op, but we essentially are member owners. And so we get a dividend check from that. The electric company, at least where I live, is a little bit different. We'll get a check that's much smaller, but we know that the prices that we pay for our electricity service is a lot less than if we were with an AEP or a different company that we're not owners of. A housing cooperative is just the coolest concept to me. Maybe because it makes me think about living in a dorm. So in a housing cooperative, members, together they own and they manage and they maintain housing. So it could be an apartment complex, it could be condos or townhouses, or it could even be, you know, single family homes, but there are several of them. And so this group of people, this co-op, they you know, were able to get financing as a group. They purchased these living quarters, and they manage them and maintain them themselves. That keeps the costs low, but also, you know, a renter's going to feel different than a homeowner, right? It's not just something that they're is theirs for the time being. It's something that they're investing in. An owner is investing in, and it's theirs. I think about the dorm because, you know, we had meetings, we had responsibilities, and that's sort of what a housing co-op would entail. We didn't own the dorms, we paid a lot for them, but still, it's that kind of community environment where you take care of the place where you live, and you do it together. A worker cooperative is picking up steam, and it's a good thing that's coming out of a not so good situation. Lots of people lost their jobs. They couldn't go to work. They were laid off in these last few months, and that's a hard pill to swallow, especially if that's your income, a big source or the only source of income. With a worker co-op, the worker is the business owner. So a lot of times what this means is that those workers, with the help of you know, calculations and costs and lots of study, you know, they can set the highest wages possible. They are not, because the workers are the owners, they're not trying to undercut or trying to just, you know, squeak by with paying the workers the bare minimum, because they are the workers themselves. So it ends up in this situation, or this work environment where the workers are paid the best they can to get paid. That still allows the company to be profitable, or at least break even. And you own your own business. You know, you're part of the ownership of this business. And again, that's a whole other mindset. That's empowering. A good example of this is a group called Equality. They are a home care provider co-op. And so they're providers, right? They go into the homes. The providers go into the homes and they help people who are homebound or bedbound or ill and have trouble providing for themselves. So they do some light cleaning, some cooking, that kind of thing. Well, these providers, they go in there and they're going to put their best foot forward. They're representing themselves. They're possibly, you know, creating a customer. They have a customer who could create a new customer, and they will directly benefit from that business. That will do, the better it does, the better they do, because again, they're owners, and that profit margin and that profit could just mean more for them. And then lastly, I'll talk about marketing cooperatives, also called producer cooperatives, and this one is very common in the agriculture field, because we have a lot of small producers. The number of small scale producers is increasing, and there are lots of reasons for that. But the caveat is that sometimes small scale producers don't have the same access to markets or even inputs that bigger scale, large scale producers have. So the ag marketing co-ops, they come together. They can share a brand. They can, instead of having to individually kind of put together and go out to farmers markets or go out to venues every week and kind of run themselves ragged that way. Now they can share the resources and the burdens and the expenses even of selling and reaching a bigger customer base. And that can be something like a farmer's market. It could be something that they're doing online. If they pool if growers particularly pool their produce or their products, then they have a bigger offering for a bigger market of customers. But there's more than just, that's one way that farmers could become a cooperative and cooperate. Worker co-op farms are where maybe you share labor, and maybe you are the labor as a farmer, but you work on your farm, and then your co-op members, your fellow co-op members come and help you work that farm. You're planting, or if you're harvesting, or if you're tilling, or whatever you're doing. And then another day you go to somebody else's farm, another day you go to some more. So it helps with the cost of labor, and there's just this idea of we're not always competing against each other. Sometimes we have to, but we don't always have to, and we can help each other out. Purchasing cooperatives, again, have that access to economy of scale, so you can buy in bulk, or you can buy a service that otherwise is not available to individuals, but as a group you can take advantage of that. Equipment, you know, if there's anything you hear about farming, it's that equipment is so expensive. So as opposed to somebody having to shoulder the cost of a $500,000 implement, you know, a co-op with several members and some access maybe to financing can purchase it, and then amongst the co-op you decide how are you going to use this, how is it going to be maintained, where is it going to be stored, and that's something that you lay out as a group. And it's sort of the same thing. And land is just is another one that ranks high up there with a high cost input. Again, pool your resources and work out how you can share that land. Multi-stakeholder customer farmer projects. This is more of the marketing, where you can pool your products and then reach a bigger customer base. Value-added production, packing sheds, storage sheds, or storage, refrigerated storage. I can't even say how expensive it is, but if you're sharing that cost, or maybe you're even sharing the duties of getting your produce to that place, that's that idea of helping each other out, and each of you benefiting instead of trying to scrape by on your own. At TRCC, we're over at UTRGV. These are some of the services that we provide, and these are all meant towards to help co-ops, businesses that want to be co-ops, or just startup businesses in rural areas and ag businesses. A feasibility study is essentially a study of the industry and how that might translate to a more local effort. Formation can be a bit of a headache. We can help you with the paperwork and the process, and maybe getting all that in order so that you can go to the state, or even the IRS. Business plans. I know y'all are entrepreneurial in nature, you have these great ideas. If we get together to put together a business plan, we can help you think about maybe stuff that you haven't thought about, and you make considerations for everything from labor to inputs to insurances and risk and competition. And we'll put that in paper, and with that paper, with that document, you can go to potential investors, you can go to the bank, you can go apply for grants, or you can just share with other business owners and maybe find a way to collaborate. Marketing plans have changed. You used to do it door to door, face to face. Now you're going online and social media. Capitalization strategies, again, is about that input, that financial input. Maybe you need some startup funds, or you want some expansion funds. Excuse me, that and applications for funding. We can look at grants, we can look at loans, we can look at investors, or more non-traditional ways of getting some capitalization and funding. And meeting facilitation. Sometimes groups of people, when they get together, you know, you're friends, but as a business, as an organization, you have trouble getting from point A to point B, or your meetings tend to lollygaggle, and it doesn't feel real productive. We can help facilitate that. I have a coworker who's amazing. She's so amazing at this. But we can help you make the most of your time together with your organization. So again, my name is Aisha. I am in San Isidro in the valley, but we have an office in Edinburgh, and it's that big building, that big UTRGV building that's on 281 in Freddy, over on the west side of the highway. You can call me at this number, and you can email me, and just let me know if there's any way I can help you, and we can talk through some of this stuff. Either it's an idea for a startup business, or again an expansion, or you want to look at some sources of funding. We can research that together. Thank you. Thank you all for sitting through that. It's funny to hear some of the background noise in my house. And it was really soft spoken. I'm not usually that soft spoken, but the kids were asleep, so I was trying to be quiet. I don't know. Are there any questions, Megan?
Yes, so we have a couple questions. Do you have to be in the geographical area to get some of your services through TRCC?
No, especially not in this time where we're doing everything by phone and computer. I think maybe Texas is more of our, we're more strict about working with businesses in Texas, so anywhere in the state would be okay, and we can talk remotely.
Okay, and then also would like graphic of the last slide, the mapping slide. So I guess if you can, Sheila, if you can put your email address in the chat box, and we'll go ahead and send that to you. Ronnie, Aisha, is there any comments?
Just a thank you to our presenters and our presenters from the previous sessions, and also the participants. Thank you so much. Please leave in the chat or email us or anything, any ideas for future topics. I will
I think,
also
yeah.
say, sorry, that back in March, the Texas-Mexico Border Coalition had planned for a Women in Agriculture event, a live event, and that didn't happen. It hit right. We were supposed to have it right before the state shut down, but we are going virtual. The dates for that will be September 15 and 16. It's going to be in the afternoon, so we split it up. It was going to be a full day event, but now we're splitting it up into two half days. And so again, if you'll put your email in the chat box, then we can put you on a list and send you that save the date and that the information for that virtual event. It's going to
And
be a little bit different than we have here. We'll have different speakers and different presenters, and we have some great sponsors that are all very, very supportive of the idea of the women who participate in agriculture.
we have one question for, I believe, Gail. And that is going to be, what is the smallest size farm that your company has insured?
We range from all different size operations. I'm not muted, right? I am talking.
Yes, you're talking.
I've done as little less than 5 acres. One employee or the farmer himself is the only employee of the premises. So, I mean, you can have a 2-acre farm. Farm Bureau will cover it for you.
Ronnie is located, he covers Willacy, Cameron, and Star, and that's his contact information. And then also, I am the Community and Economic Development Agent for Willacy County, and that's my contact information and our office number. And then I also have Aisha Cruz Reyes, her contact information, her email, and her cell phone. So if you all need this information, we can go ahead. If you want to request it, it'll be there for you to request, or if you want to just take a quick pic, that'll work as well. Ronnie, do you want to make your final comments?
Yes, I just wanted to say I wanted to thank everybody for attending our presentations. I know we've had others participants. I don't know if they're logged on today, but just to make awareness to you all that any kind of information that you have in agriculture related to your farm or your ranch, feel free. Like Megan mentioned, that is my contact email. And just contact me, so that way, you know, in agriculture there's always new areas that people have. There's nothing new that as far as every day is different. It might be something on wanting to learn about aquaculture or gardening or with livestock or anything that you have in concern about. Feel free to call us, and we're here to help. And I guess that goes with Megan as well, and Aisha. I want to just once again thank you all for being a part of our programs, and feel free to contact us when in need.
Yes. Thank you, Ronnie. So at this time, if there are no questions, and even if there are questions, we'll go ahead and direct them to the correct presenter. And again, if you've missed the past two sessions, there is a link here in our chat box, a YouTube link that you will be able to access those presentations. We would like to thank everybody for joining us today on our last Women in Agriculture presentation. We hope that the information provided in the past three presentations were informative and can assist you with your operations in your future. Again, thank you to our presenters, and thank you for everybody tuning in to our Women in Agriculture three-part series program. Thank you.
Thank you.